Good morning, everyone. This is Marshall Giller bringing you the morning comment for December 30th. Well, market activity was dominated by Greece, where the failure of Parliament to elect a president yesterday triggers a general election. Greek stocks and bonds collapsed. The money flowed into German and French bonds, where the yields hit another record low. But Portuguese yields only rose a bit, and Spanish yields actually fell, indicating that the market isn't worried about contagion from Greece to the other peripheral countries. That means the impact of the political uncertainty on Eurodollar is likely to be much less than it was in 2012, when Greece held 2 elections in 2 months, and it seemed that they might leave the euro. Nonetheless, the uncertainty is likely to weaken the euro, in my humble opinion, as the yield spread between bunds and treasuries widens. U.S. Treasury yields also decline on the flight to safety, but at least they're still positive. German yields are negative out to 4 years. You have to be pretty bullish on the euro to accept negative yields in preference to positive U.S. Treasury yields. That may be why the DXY index of the dollar's value hit a 2014 high yesterday, despite the fall in U.S. yields. Now, dollar-ruble continued to move higher as oil prices fell further. The continued fall in oil prices yesterday, despite an attack on Libya's largest oil port, augurs poorly for the ruble and indeed for the other commodity currencies as well. Dollar CAD closed at a 2014 high yesterday, while Aussie Kiwi hit what looks to me like a record low. I think the continued decline in oil and commodity-linked currencies will be another theme for 2015, at least for the beginning of the year. Later on, U.S. oil production may decline as high-cost wells are taken offline, but so far there's little indication of that happening yet. Now, gold fell further despite the news about Greece and lower U.S. interest rates. I just wonder what on earth is ever going to push it back up. As for today's indicators, Eurozone M3 money supply for November is forecast to have accelerated slightly, but it remains pretty low, and anyway, credit continues to contract. That shows that the ECB has failed to transmit its monetary policy adequately to the banking system despite all its efforts, and it adds to the pressure for further action. In the U.S., the S&P Case-Shiller House Price Index for October is forecast to have accelerated somewhat, while the Conference Board Consumer Confidence Index for December is expected to have risen, both dollar-positive news. There are no speakers scheduled on Tuesday. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.